Good morning, everybody. This is Mark. We're back here for the morning call. So it's Tuesday, holiday week. So the action we already started seeing it slowing down yesterday. It was pretty lethargic. Majority of the day, a little bit of selling, and then right at the end of the day, you know, from a gap up, a little bit of selling, almost to unch for the day, and then right at the end of the day, last 20, 30 minutes, you got some buyers. We're having some follow through today. You know, I would basically use Friday's low as a pivot at this point in time, as a gauge for me. Possibly, if we're going to get that rally, you know, I said up or down 2%. That's really where I've been thinking we're going to close. You know, the overall market. We were down 3% at one point. You know, if we're unched, that would not surprise me. Use 199.78 as a gauge, and here's the spider chart so you can see it. Gapped up a little bit this morning. I don't think we go too far too fast, but you never know. Santa Claus rallies do happen very quickly, and you know, high beta I still think is in the category that it could happen. You know, you had some reversals yesterday, which in my opinion could trigger some longs. Amazon came down almost below its 21 day, came back above. Still pretty lethargic action, but high beta has been pretty lethargic at this point in time. We'll have to wait and see if anything triggers. Maybe above 670, it's interesting. We'll have to wait and see. Google, much of the same. Came down 3 days in a row, bounced a little bit on Friday. Towards the end of the day, it's just stuck in a range, and you can just see it. You know, I wouldn't put too much effort into this type of trading right now, but if it wasn't the end of the year, I wouldn't be interested at all in some of these plays. But because it is the end of the year, and I do think there will be some maneuvering, I think a lot of the tax loss selling has happened. That's hence why I keep going back to my high beta plays, because they've been outperforming all year long. Facebook's much the same. You know, came down to its moving average, 8 day, and really just, was it 8 day or was it the 50 day? And held. But it's been lackluster. It's been stuck between a 108 and 103 range for a better part of, you know, a month and a half, 2 months, which again creates a tight pattern. I don't know if it breaks out above there. I don't think it breaks down below there, at least temporarily, even though the action is pretty spotty. You know, Tesla actually looks okay to me. Tried to get itself going yesterday. Had some resistance. You know, it has some resistance around 238-ish. So 237.50, 238 probably would be a trigger long for some new buys if there's anybody in there, you know, that sees it. Chart-wise, maybe a few more days, but it actually looks okay from a technical standpoint. NFLX, not really looking great, coming down to where it broke out from the other day, which is, you know, 110, 111. So if it gets back down to that level, I'd actually probably look to get involved. Understand the pullback, but I probably think it probably holds, you know, between 116 and 112 in that area. So if it gives you a chance to buy, you take those levels for what they're worth, and you go from there. You know, BIDU had a little bit of a bounce yesterday, so some of these Chinese guys just held its moving average, nothing too exciting. One of the Chinese guys that actually looks good, two of them. WUBA looks okay, but had a steep move up, coming back to its breakout, and then, you know, should digest a little bit. And the NTES is hanging in there and really just been dragging through its 8 day moving average for a period of time. Oil's still the tailwind at this point in time, the headwind, I guess. It's hanging over us like an 800-pound gorilla, and I see no reason why that stops. You're going to have your little pops and drops, but it seems like this is a downtrend that's lasting for a period of time. So, you know, in my opinion, trying to trade it on an intraday basis, you look for capitulation points possibly for little reversals, but overall the downtrend is intact, and you got to respect that. So any real severe rally is more shortable. You know, 4 days down, 5 days down, you're probably not the best bet to short, even though the pattern tells you there's really no catalyst for this to go long. We're still hanging above 30, so that's relatively okay. But my gut is that we probably can touch the 20 period at some point in time. That will be the capitulation that I think this market needs, or at least the oil sector needs, for it to rally. But that could take another few months. I don't think it happens year end, and that's what we're looking at right now. Other ideas, you know, BABA, same thing. Not much there. Above 85.50 may be interesting. ESRX came out of pre-announcement. up 3-4 bucks. I would say above 90, 89.50 looks okay. But again, I'm never chasing up $3. Not in this tape, certainly. You can't afford it because we're just not getting the follow through that I think everybody wants across that board. Bios are hanging, but nothing really to talk about in that respect. Celgene came down a little bit. Possibly the buy area, 108, 110 ish, but technically it's not telling us that yet. Gilead, it seems like it's holding 100, so maybe it's the buy area around here, but you got to have to sit. So these are ideas, but there's not necessarily triggers to actually execute on the ideas today, and the immediacy is not, I'm not feeling it. I hope it changes before the end of the year. I have one more day left in this year, which is tomorrow, and then I'm out till January 2016. But I still, my gut says, Santa Claus rallies can happen. They can happen in the last few days of the year when really, quite frankly, everybody's gone. This market has done this a lot at this point this year. Obviously, the week everybody was gone in August, we had the most violent and volatile week we've had basically in years. And it was a week when everybody was quote unquote on vacation. So, nothing surprises me in this tape at this point in time. I think you always have to be prepared accordingly. But chart-wise, we're not seeing anything exciting. I'm not so bearish. I'm not so bullish. So I'm basically stuck a little bit in the mud in the middle of the range, which means I should do less. That's the key. If all of us are sort of feeling the same way, and you look at the technicals, they're not really telling us, giving us any sort of clue. I think less is the best scenario. Defense, wins all the championships. So you just have to respect the fact that when there's times, lull periods, and again, the last 2 weeks certainly could be a lull period, even though normally it's not. We got to respect it and play accordingly. I think we're in that camp right now. So play defensive. Respect the fact that nothing's really giving us a lot of clues either way. I'm using the spiders, the 199.78-ish, as a level that it holds. Up, down 3%, 2%. I think that's where we closed on the S&Ps, which is fine. And we'll see if high beta actually has any action, as we get about 7 more days left in the year. If not, we sit and we wait. Enjoy the day. I'll be on the radio, and I'll talk to you at the close.